Hi, Megan Hernandez here, and I'm going to talk to you guys today about quarterly estimated income taxes. I know that's not a very exciting sounding training, but it's something that I bet you've heard of, whether you consider yourself an entrepreneur, business owner, freelancer, contractor, 1099 worker, all of the things. If you don't have taxes coming out of your pay, if you're not getting a W-2, you're not an employee, then this is something that you should know about. This is something you should learn about. And it's not something that you can easily just Google search or ask in a Facebook group, because there are a lot of misconceptions, a lot of differing opinions. And so I wanted to bring this to you guys to just clearly lay out exactly what these payments are, exactly who should be paying them, how you calculate them, all of the things. So if you're ready, we can go ahead and take a look. I have a little slideshow prepared for you, and we will dive straight in. Okay, quarterly estimated income taxes. So first of all, let's start with what are these taxes? So if you break it down, they are taxes on your income. This is the same thing that you see, the same as everybody else. Everybody that pays taxes April 15th, whether you're an employee or not, those are called income taxes. So these are just quarterly estimated payments, but that's the tax that this is. That's the tax we're talking about, income taxes. So all the taxes on your income. And if you pay it quarterly, that just means you're splitting the payments that would be due at the end of the year. You're splitting them into multiple payments that you pay to the IRS, as well as the state if you live in a state that has income taxes. Again, these are estimates. They are based on previous data, current data, and projected future data, which we'll talk about more in a minute. But they are payments made in an attempt to satisfy 100% of your income tax liability. It's the same thing as if you're an employee. You are trying to pretty much guess or estimate how much taxes you should owe at the end of the year, and you are trying to pay this to completely satisfy it. You're not trying to overpay, you're not trying to underpay. The ultimate goal is to just satisfy the tax liability that you will owe. So why can't I pay these once a year like everyone else? This is one of the most common questions that I hear from freelancers and contractors. So I wanted to answer it here and explain it. So first of all, I'll say some people can. Some people can pay once a year. These people owe a very, very small amount of taxes. These are typically people that have also made a very small amount of money. And we're talking, a couple of thousand at most. And we'll talk about more specific in a minute. How do you figure out if you're one of this type of people? But I want to put that out there. Some people can. Some people can wait and pay at the end of the year. But the IRS has a rule that if you are going to owe a certain amount of taxes, that you are supposed to be paying these throughout the year. So you may be asking, okay, well, why do I have to pay throughout the year now that I own my own business, where when I was an employee, I only had to pay once a year? But let's think it through and let's talk it through. If you're an employee, you fill out a W-4 form when you first start with your employer. This is a tax form where you select if you have any dependents, if you are claiming any withholding, if you are filing single, married jointly, married separately, and you are filling this out and you're handing it over to your employer, who then gives it to their payroll department to determine the payroll taxes being taken out. This includes income taxes, okay? So every time you get paid on a biweekly, monthly schedule, whatever it is, you have payroll taxes coming out. That means that you have income taxes being held out of your pay that your employer then submits to the IRS and the state. So they are paying on your behalf once a month or once a quarter, depending on their business setup, depending on what state they're in. And these are being paid throughout the year to the IRS and to the state. So if you own your own business, it's the same thing. You're required to submit these payments. They have it set up quarterly. Some people actually choose to do these monthly for themselves, but that's the IRS rule, that these payments are meant to be submitted throughout the year, not just at year end. Okay, so how do I know if I'm one of the people that has to pay or if I can wait? So the general rule is $1,000. If you are going to owe $1,000 or more in taxes at year end, then you need to be submitting payments throughout the year. If you notice too, when you're an employee and you're filling out the W-4 form, you can select if you're one of the people that's exempt from paying taxes. You can select that box. If you know that you have so many personal credits and so many personal factors going on that you're not going to owe more than $1,000 at year end, you can select that no payments are taken out. So same thing if you're a business owner. If you're going to owe less than $1,000 in taxes, you do not have to make these payments throughout the year. So how do you determine if you are going to owe $1,000 or more? So the general rule is 5 to 1. If you have at least $5,000 of taxable income, then you will most likely owe $1,000 in taxes. That's usually how it works out. The more commonly used, that's how we look at it on a more common basis, is we try to determine if it's $1,000 or more. A lot of people look at their previous year's tax returns and they see, you know, a lot of times if you go to a tax person or use a tax software, you have vouchers that are printed up and they're based on last year's data. And so that can usually help you determine if you owed taxes last year, you're going to owe taxes this year. That's with the understanding that this year is going to look exactly the same as last year, which doesn't happen for most of us, especially if we own our own businesses. We're hoping to grow. We're hoping to make more money each year. So that is not the most accurate way to do it. So the actual way to look at how much you'll have to pay is to look at your financials and to look at your actual tax credits and tax liabilities and come up with the amount yourself. So let's dive a little bit more into that. How much do I actually need to pay? How do I figure this up? So this, unfortunately, is not super simple. This is a little bit of a process, and it takes some practice. It takes some work. You know, I've been in this industry for over a decade now. I've had my own business for over 2 years now. I have helped hundreds of entrepreneurs figuring out their quarterly taxes, and I don't have it down to the penny either. A lot of people, we get it within $100 or so we get really excited if that's the case, but it's really hard. It's really rare. And you'll notice when you were an employee, rarely did you file your taxes and it ended up zero, right? You either owed or you got a refund. So it's the same thing with you having your own business. You have to kind of play with it and figure it out. So how much do I need to pay? So the first thing that you are going to look at is your business financials. This is one reason why it's so important to have a bookkeeping system and to have proper records for your business, looking at, you know, not just the income, but all of the expenses. If certain types of expenses can be categorized in such a way that the income is not even taxed in the first place, it reduces that income. So it's really important to have that tax knowledge so that you're not overtaxed. That's why it's really important to have a bookkeeper or an accountant or tax strategist helping you with that. That's something that I teach my course students, how to actually know what tax expenses are the best ones to use, which categories to use, things like that. So you need to be watching your financials. You need to be tracking all of your expenses. You need to be keeping accurate notes, doing reconciliations of accounts, all that stuff, so that everything's in order, so that your reports at the end of the year are completely accurate. You're comfortable that the numbers are in the best setup that they can be, that you have the best tax benefits included, all that stuff. So you have your financials and you have your net income. So you look at the bottom number. You have your revenue up top, and then you have your expenses all listed out, and then you subtract that all out and you get your net income. Now it's possible you have a net loss, and that would be a negative number in your business, in which case you're not going to owe taxes for your business. But if it's a net income number, then your business does owe some taxes, does have some tax liability. So you have that number. The next thing that you're going to look at is your personal factors. So you're going to look at tax credits and tax liabilities on the personal side. So this is applicable for anybody with a sole proprietorship or single member LLC. Honestly, even with an S Corp or partnership, because all of that business stuff flows to the personal returns as well. And you're going to look at tax credits or things such as if you have any children, if you have childcare expenses, if you have any student loan debt, if you have straight out university expenses to a college, if you have donations, all these things are tax credits that reduce your overall tax liability. So liabilities are things like, if you took some money out of your IRA, or if you sold a home and you got a profit on it, or if you have any stocks or bonds that you took some of the money out of these things. These are things that are going to cause you more in taxes. They're going to bring you more of a tax liability. So you look at all of those factors, and you have your business stuff, you have your personal stuff, and then you're going to look at the net income of all of it. So not just your net income of your business, but also include the net income of all your W-2 jobs, all of your all of the money that you receive for your household, all the money coming in, and you get that taxable income, you get that taxable number, and then you have percentages that are assigned to it. Now you can look at last year's tax return and look at the percentages last year and think, well, are my personal factors still similar this year as they were last year? If so, and if you're in the same tax bracket, then you can use a lot of those same percentages. Overall, when at the end of the day, the percentage that you come up with is going to be very personal to you. It's going to look very different than your neighbor, than your colleague, than your, if you have a partner, if you have any business owner friends, everybody's is going to look different. It could be anywhere between 10 to 30%. And that's why a lot of people say to go ahead and just save 30%, because that's on the high end. But it really could range. And so it's really important to try to figure out your exact percentage and what is, specific to you, so you can be more accurate. So that's what I meant by commonly used, that some people just go ahead and say 30%, call it a day, overpay in taxes, and then they'll get a tax refund. It's not exactly what the IRS wants you to do. And it is making a lot of those funds not available to you throughout the year, but that is one way to do it. Coming up with the actual is a lot more difficult to figure out in the beginning, but it helps you more with your cash flow. It helps you determine just exactly what you want to know, how much money exactly you need to set aside for taxes, how much to plan for. And this kind of stuff can help you plan in other areas of your life too. It can help you determine your rates that you need to charge in your business. It can help you make certain decisions about retirement funds that you get into, different things like that that can lower your tax liability. So it's kind of complicated, but those are all the factors that do come into play to figure out how much you need to pay. So what if you get it wrong? You're just looking at this all of these different things and doing the math, and you're like, I don't have any faith that I'm going to be able to figure out how to do this. So first of all, keep in mind, these are estimates. You are not expected to get it 100% correct. Again, look at all of the employees out there with W-2s. They are either way overpaying or way underpaying. It's common. It happens pretty much to everybody. So these are just estimates that you are trying to figure out how much you'll owe and you are aiming for. To be on the safe side, if you think you are a little bit low in your estimates, go ahead and set some money aside in savings. Go ahead and put some money aside to not touch it. So you're making estimated payments and you're making these quarterly, but just have some money, have a little cushion set aside just in case you owe some more. And then again, you will be penalized if there's more than $1,000 difference, because again, this is to help you determine if you'll owe $1,000 or more in taxes. If you will, then you need to make those payments. So you make your estimates. If you are more than $1,000 off in your estimate or in your payments in general, then you do receive a penalty fee. That penalty fee can fluctuate. So it's very important to try to get this as accurate as possible. Okay. So that's all I have for you. Let me go ahead and close this out. I know not super fun stuff, but important nonetheless. So, you know, this is something that you can definitely learn to do for yourself. But if you are concerned at all, this is something that you can get help with, and you can get help from a professional that can not only help you determine how much taxes you'll owe, but also help you keep those taxes on the lowest end possible. So any questions at all with this, feel free to reach out to me. This is something that I help, again, hundreds of clients with every single year. I've helped people save thousands and thousands of dollars, and I've helped them just run their business smoother, keeping all this stuff in mind. Okay, so everybody have a wonderful day, and I will talk to you again soon. Bye-bye.